What is going on, Future Focus team? Back at it with another video. If this is your first time to the channel, thank you, welcome. If not, welcome back. The purpose of this channel is to educate and entertain you, but the ultimate goal of this channel is to make you just a little bit smarter today in order for you to have a better tomorrow. And with that said, today we're going to talk about Bitcoin and, well, cryptocurrency as a whole versus gold or precious metal as a whole, because what we're going to talk about applies to all the cryptocurrency and applies to precious metals as a whole. So the first thing we're going to talk about is some myths about cryptocurrency. All right, so one of the first myths is that you have to buy a full Bitcoin, but that's not true. All right, so this is what it looks like here. One full Bitcoin is the decimal you see all the way to the left, the number you see to the left of the decimal point. That is one full Bitcoin, and I'll show you what the current price of it is right now so you can see what it looks like, but it's around $19,000. And then to the right, you have all these little different types of currency, which is millibitcoins, bits, and the most famous ones are known as Satoshis. That's the smallest version of a Bitcoin. So basically like their version of a penny, but I'll show you specifically what it looks like. So currently, as of yesterday, the price of Bitcoin was $19,057. So one Bitcoin equals 19,000. And if you break this down into the Satoshis, $1 US is the equivalent of 5,249 Satoshis. If you break it down to the right, it'll show you what it looks like in Bitcoin. And at the bottom, you'll see the price of Bitcoin. So inside of that Bitcoin, there's other currency that will be used. So when you buy a coffee with cryptocurrency, you're not using all of the Bitcoin. You're just using a small percentage of that Bitcoin, which is the equivalent of whatever the currency you're using is. All right, so another myth is that it can't be used. Like, why should I buy this? I can't use it anywhere, so what's the purpose of purchasing this? So right here, you see a few exchanges that are, as of today, using this. So you have things like Amazon, Microsoft, PayPal just invested over $300 million into purchasing all the new Bitcoin that are created. Every single day there's Bitcoin being created, and PayPal is buying over 100% of the Bitcoin being created every day. So how does that work? How do they buy over 100%? Well, there's still Bitcoin that are already in circulation. So they're buying all the Bitcoin being created that day, plus some of the ones that are in circulation. Here you have some other ones. Bank of America, there's banks that are actually using this currency. You have Goldman Sachs, which is a big one. You have NASDAQ, IBM, Intel. So all these big, known, well-established companies are currently accepting Bitcoin. This is a website called spendabit.co, which is kind of like an Amazon version where they kind of put together all these people who, companies that accept Bitcoin. And you could put in here on the search engine and search for any particular product that you're looking for, and you'd be able to purchase it with Bitcoin. What I thought was funny was, I wish Matt was here, because I found two of the biggest silver metals, precious metals exchanges. So they're like well-renowned. One is APMEX and the other one is JP Bullion. But so if you look here, I can go to this exchange and I could purchase the physical asset with a crypto asset. So I looked at that and I just thought that was funny. I wanted Matt to see that, because even, because he's precious metals buff. He's big on precious metals. So I thought that was funny. Here, JM Bullion is another exchange, and they actually accept more than just Bitcoin. They accept Bitcoin. They accept ETH, which is Ethereum. They accept 4 US dollar pegged stable coins. And basically a stable coin is a cryptocurrency that's linked to a currency. So they call stable coins because they don't have the volatility that a regular cryptocurrency has. These are more stable because they go hand to hand with the price of a currency. And the last one is XRP, which is another type of cryptocurrency. So what else can I use to pay with cryptocurrency? Well, I found some articles, but this one was one that I thought was good. Some Americans are already paying their taxes with cryptocurrency, not just Bitcoin. This one says Bitcoin, but they're paying with other. Uh, One thing I wouldn't recommend to do that though is that when you have cryptocurrency, it's sort of like having a stock where when you get rid of it, you have to pay capital gains on it. So basically, when you're paying taxes with your Bitcoin, you're paying taxes and you're going to be taxed on that because you're making a capital gains purchase with that Bitcoin. All right, the next one, it can be hacked. Uh, so since 2009, Bitcoin wasn't hacked. It hasn't been hacked. There was one incident, and one of these slides talks about it, where one person just made a way for him to receive. He found like a loophole in the blockchain, and he found a way to receive all the existing Bitcoin. So what had to happen at that time was there was something called a forking event, where Bitcoin broke off into separate forks, and now you have something called Bitcoin Classic. There's another one called Bitcoin Cash, which is a hard fork, which sometimes cryptocurrencies reach this area where the people that vote and have a say in the cryptocurrency, they see it going two different ways. So what ends up happening to that cryptocurrency is it parts, and it goes those two different ways. So some people they stay with the traditional one, and some people go to the new innovative one. Well, a 51% attack. Nodes controlling 51% of the overall computing power within the network can disrupt it. Mainly, it happens in public blockchain rather than permissioned blockchain. So basically, this means like if a person has the capacity to have 51% of the entire blockchain, and all a blockchain is the computers all around the world from different people that are controlling that blockchain. The way cryptocurrency works, or Bitcoin specifically, is it's just a ledger. So on that ledger, every single day there's transactions, and those transactions are as simple as Jennifer gives George 5 Bitcoin, and that's all that gets posted, and that gets put in there. These ledgers are visible to anybody. Anybody can see them. However, every single day, the people that control the ledger changes. So that's how the integrity is kept. There's no bank or no central authority that controls all of it. So that's what that first one is talking about. If 51% of it's controlled by one entity, they have the potential to attack the entire blockchain. But because there's so many people that are doing this, it's hard to control 51% of it. So this is another slide where it's like the standard cyber, like what your bank uses, versus the block security on the bottom. So denial of service. In traditional environments, denial of service attacks target a company's web server. In a blockchain, a denial of service attack submitting more transactions to the blockchain than it can handle. So the way the blockchain works is it's called a blockchain because all these their transactions, they're put into these blocks. They could be 8 gigabytes, 16 gigabytes, and they're put into these blocks, and the blocks are sent, and that's the ledger that's published. So if you put too much into those blocks, it could get overwhelmed, and that's what it's trying to say there. But basically, if you could read through them through the top and bottom, and you can see that there's no difference. Like there's your bank at Navy Federal or Bank of America, JP Morgan Chase, they all have security, but they can all be hacked. And blockchain has the potential to be hacked, but it's less susceptible to being hacked. So Bitcoin versus gold. All right, so 21 million coins is a known fact that 21 million coins will be the most that Bitcoin are ever created. So like I told you, Bitcoin are being created every single day, but once they reach 21 million coins, it'll be done. What's happening every 4 years is something called a halving event. And all this means is that the amount of Bitcoin that are produced every 4 years gets cut into half. So last year it was like, let's say 18,000. This year, 1,800. This year is like 900 Bitcoin that are being published every day. Carlos, welcome to the chat. So 21 million are being published every day. However, I wish Matt was here for this one again, because this is one of his big arguments that the supply on Earth is very limited. But what I'm going to show you here is there's a reason that Elon Musk and Jeff Bezos are trying hard to get into space. So you have Blue Origin versus SpaceX, which is Elon Musk's company. So they're trying really hard, and Elon Musk has made it well known that he wants to begin mining on top of asteroids. And while that sounds like crazy, like why would he want to do that? The reason he wants to do that is because there's asteroids out there that contain so much precious metals that this one specifically, Psych 16, if we were to capture this one and mine it, there'd be enough precious metals on there to make everyone on Earth a billionaire. So there's 8,000 quadrillion. That's an 8 followed by 18 zeros. So it lies between the orbits of Mars and Jupiter. It contains gold, platinum, iron, nickel. They say it was formed by a violent collision between two planets. And NASA and SpaceX visit to launch in 2022 to go and see what they can get from that meteor.
Should I make it again?
It's all right. So why are precious metals so important? Why do they want them? Well, because everything we're going to be doing in the future revolves around things that need precious metals. So anything from if you're trying to go green, you're going to need things like solar panels, and those solar panels have they have gold, they have platinum, they have silver, they have nickel. These EV and electric vehicles, all the electric vehicles, all the autonomous vehicles, they're going to need a mass amount of precious metals. Your cell phone, like these are all things that we have that are going to need these precious metals. And whoever can capture these, because if you look inside the mines that we currently have on Earth, the amount of gold and the amount of silver that we're currently producing is diminishing every year, because obviously on Earth there can only be a finite amount of resources. But out in the world, like it says right here, more asteroids discovered near Earth every single day. So if we could start mining on these asteroids, like we'll be set forever. So whoever gets to these first is going to have a great advantage. Next, easy to verify, hard to verify. So Bitcoin, like I said, you can't just hack it and make believe. The only way you can do that is if you get access to somebody's wallet. So if you get on somebody's phone and you go into their wallet that has their Bitcoin, which you'll need to know their key, because each cryptocurrency has a certain key that you need to utilize. If you could get into all of that, and then you can, send yourself their Bitcoin to your wallet. But guess what? They're going to know it left their wallet, and they're going to know it went to your wallet. And it's the same thing that could happen with your regular bank account. As far as gold, it's hard to verify because there's so many people that are forfeiting. I lost my train of thought. There's so many people making fake gold out there that, like, they're even stamping well-known people that are selling gold, and it's kind of causing a rift. This right here, Ethiopia Central Bank buys fake gold. 7 officials arrested. So central bank purchased fake gold. And these are people that are like, a central bank is a huge thing. They're like the people that control the money in that country. And these people were fooled into buying fake gold, because let's just use JM Bullion as an example. They got these bricks of gold, and they probably had stamps that looked exactly like the JM Bullion stamps, and they grabbed them all, they accepted them. So now just picture a person like you and me, who is not as savvy as a central bank is supposed to be. Like, how do we even know that this silver or gold or platinum that we're buying is even real? So if they can be fooled, we can definitely be fooled. Some pros and cons. So some pros for Bitcoin: the higher potential profits. As you've seen, it's gone from like pennies to now being worth $19,000. It's easy to store. You can store it inside your cell phone. You can store it inside your computer, or you can pull it out and store it on what we call cold storage, which is a hard drive that you can carry around. Transactions are faster, and they could be made 24/7. They're harder to steal, and user anonymity. You don't have to share your real name when you make a transaction. Cons, extremely volatile. It's gone to 20,000 before and dropped all the way back down to 3,000. Could be replaced by another crypto. There's over 5,000 cryptocurrencies out there right now. It's an intangible asset, which means that you can't hold it. Unproven value, which is kind of not that true anymore because people are using it like we talked about. And risk of technical flaws. So, you kind of need computers and you need a big system to make this run. So if all the power went out on Earth, then obviously Bitcoin would be rendered useless. So that's a risk you have to take when you're using it. Pros of gold is less volatile. However, in March, when all the asset classes fell down, the time when you thought that gold would thrive and blast off, it kind of dropped as well. Right now, when we're in a high inflation period, where the Federal Reserve is printing money and printing money and printing money, where gold should be at like $5,000 right now, is actually been staying stable at 18,000. So it hasn't really been doing what it historically is supposed to do. It has proven value historical. It's been used as a mean of trade for over, all of history has used gold as a way to trade. Larger market cap. It's a tangible asset you can actually hold in your hand. And it's a hedge against inflation. So it's a hedge against the dollar going up or down. Cons, lower potential for profits. Although it is less volatile, it goes up way, way, way slower. It's easier to confiscate, so people could, grab it, take it from you. Harder to store. It's very expensive to store precious metals, like very, very expensive. Difficult to send and receive. So let's say worst case scenario, the reason you have gold is for like those end of the world type of situations. So let's say that happened, and you had like 18 bricks of gold and you wanted to get out of the country. You can't just simply grab that gold, put it in your suitcase, head to the airport, and you're gonna have to report that. And 9 times out of 10, most countries are not going to let you come into the country with that amount of gold. So now you have to find another way to get it there. So what are you going to do? You're going to pay to have it shipped safely in hopes that it'll get there to you on the other end once you get to the other country. But if stuff has hit the fan that hard, and you have gold and you have to tell people you have gold, you're giving them the opportunity to take it from you. You might be in another country waiting on it to arrive and it may never arrive. And then market manipulation. A lot of banks recently have been manipulating the price of gold. And this is as recent as like July, June. I think Goldman Sachs was one that got fined over $1 billion because they manipulated the price of the gold futures. So another thing I wanted to show you was that the Bitcoin chart and the gold chart look very similar. So as you can see here in 2016, it formed a base and it broke out. This is trying to show you that the trends are kind of remaining the same. So here it's in the base and it's primed for a breakout. It has reached broken an all-time high. And usually when any asset class breaks an all-time high, that's bullish, which means it should continue going up. Right now, it's kind of hit a consolidation period. However, people are thinking like 2021, it could zoom up to 30,000, 50,000 in no time. So the reason it's down is because during these periods, there was an overwhelming supply relative to demand. And that's what kind of happened with gold. So gold, the same, it looks exactly the same. It had the base down here in 2016, and this is what it currently looks like. You look at them side by side and they look identical, both of their charts. This is a chart that a prolonged YouTuber made on Bitcoin, and it was just something where he was just showing you the potential for the cryptocurrency in the future. So this is what we've done. This is where we're at. And this is where it should go if it continues to follow the same trajectory that it had previously. So we're talking 30,000, 50,000. So this one right here is I put it up because it's the Google search volume of Bitcoin. So as you see here, when 2016, when it went up, people were searching Bitcoin and cryptocurrency and trying to figure out what it was. And usually when you look at Google Trends and you see the asset classes, when people are searching for what it is, it kind of goes hand in hand with the price. However, nowadays, the price has been going up, but the volume of searches haven't gone up with it. So that shows you that more people are buying it and trying to keep it. And that's more evident because of the amount of withdrawals that are being made on Bitcoin. So Bitcoin is been a way to trade, like you buy it, you wait for it to go up a little bit and then you sell it. But now people are buying it and they're pulling it out of the exchange into their wallets or their cold storage that I talked about earlier, and they're actually keeping it on them. So it's just more bullish. It shows you that people are not just buying it to trade it; they're buying it because they feel it is the future. Um, this last chart I put up, I just wanted to show. I wanted to add the dollar in there, and this just talks about what you can do with gold, what you can do with Bitcoin, what you can do with the dollar. As you can see, like the dollar, the reason the dollar is dying is because all these things are not untrue for the dollar. So, is it spendable? Hungry, you can't buy a Snickers with gold, but you could buy a Snickers with Bitcoin. You could buy something like that with a dollar. Well, not in a lot of places are not even accepting the dollar anymore. Then we got, is it anonymous? Transfer delay, like we talked about earlier, transaction fees, non-counterfeitable. You can counterfeit gold, you can counterfeit the dollar, you can't counterfeit Bitcoin. Theft resistant, even with your storage, they could steal it. Open source, durability, inflation proof, irreversible payments, decentralized, diversibility, scarcity, the amount there is in the world. Well, this one is kind of, as we talked about with those asteroids, if we could get access to those, then the scarcity would be, 3 red X's for scarcity as well. And no monetary usefulness, which means that at the end of the day, a dollar bill is just a piece of paper. And shininess, yes, gold is the shiniest one out of all three. So what do you think of what are some things you might think of like pros and cons wise with cryptocurrency?
It just costs so much for one Bitcoin.
Yeah, but just like M1 Finance, man, like I talked about here, we're not you don't have to buy the whole thing. You don't have to you could do fractional, you know, and it's not a fraction of a share like a company like a stock is. When you're buying a fraction, you're still buying an asset, like you're still buying some sort of currency. So you're not just buying a fraction of the stock, you're buying satoshis, you're buying the millibits, you're buying the little ones, uh, and little by little you can add up to it. But don't think of it like that, because like, let's say you put $500 into it and it goes up 10%, like you're still going to make 10% on the 500 that you put into it. Does that make sense? And let's say it does go to 30, it does go to 50. Do you want to say like, oh, I should have bought it back then, I should have bought it back then? Like, we always do that. We always say, oh, it's too late, and then it shoots up another it
Yeah.
goes to, because the bullish case for it is like $300,000
God.
for one. And you might think like, wow, that's crazy, that's never going to happen. But when it was pennies, I was the one saying, what is this? People told me about this when I was on the drill field in 2012, uh, and they were like into it, but they never explained it to me. So I was like, what is? I'm not putting my money into that. They talked about mining, and to me, when they said mining, I thought it was like they told me I had to buy an expensive computer, and I just had to let it sit there, and they didn't explain what mining was. Like, do you even know what mining is?
I don't.
So mining is just the confirmation of all those transactions of the day. So your computer confirms all those transactions that were made. So Jennifer gave George 100 Bitcoin. Um, your computer, a separate computer, is the one that's verifying those transactions, just like your bank would. But the big thing with Bitcoin is the push for it is that it's saying they're not going to use it for, there's no central authority over it, you know? So basically, in the 30s, like when the Great Depression happened, people were going to the banks, right? And they were trying to get their money from the bank, but the banks were closing and they didn't have enough money to give the people that had their savings in there. Because what banks do with your money is they take your money and they invest it, they give other people loans. So because of that, now banks are forced to keep 10% of whatever you give them. So if you put $1,000 into a savings account, they could use 9,000 of it. All they have to keep in the bank for you is $1,000. So they're going to take those, the $100. They're going to take that $900 and they're going to loan it to somebody else, and then somebody else is going to pay them on your $900 that you gave them. Where they keep that money is in the central bank. It's called the overnight banking system. So that every night they have to put their money, all that 10% from everybody that invested into them, they have to put that into the overnight market to try to get some sort of dividend off of that money that you're holding in the bank. However, like let's say all the service members went to Navy Fed to go try to get their money back. We might not be able to all put our money out because they may not have enough money liquid to give us all our money back. But with cryptocurrency, that can't happen because there's not one person that controls all the cryptocurrency. There's even cryptos out there, and I could talk about them next week. There's cryptos out there that pay you dividends for mining them. So there's some that are paying like 18%, 30% off the money that you put into them for mining them. You know, one of my most bullish cryptocurrencies right now is one called Cardano. The ticker is ADA, and it's just because of the way they came out. They didn't just push a cryptocurrency into the people. What they did was they created a cryptocurrency and they made a process. So they made different stages, and every stage has like some famous person attached to it. But every stage means something. Every stage like means, so the end of the last stage just finished, and that was just decentralizing itself. So the next step is going to start actually this week, and it's just creating smart contracts. And all a smart contract is basically, if I buy a house from you, I could do it on a decentralized network, and I could buy the house from you, and that paperwork will be done through the decentralized network. So it's just contracts between different people or companies, and they're all get done on that. The end of it, like what their long-term thing is that they have their blockchain turns into like the internet. So their blockchain becomes a place where there's something called dApps. They're decentralized applications. So just like you have a Facebook app, they're trying to push where people have things like that, but because the internet is controlled by people, www is controlled by somebody. Well, they're trying to do that on a decentralized network where there's no governance of it. So like it's like power to the people type of environment. I'm bullish on that one. Again, there's a lot of cryptocurrencies out there, and I'm not saying that they're all great. But with any other asset class, there's trash and there's good. There's 5,000 stocks in the stock market, and not all of them are good. That's why you have to do your research and have a reason why you're picking one. Understand cryptocurrency. Like they're not all out trying to do the same thing. So Bitcoin doesn't have 4,000 competitors. Cardano is not in competition with Bitcoin at all. Like they're not going the same way. They're more in competition with Ethereum, and they like publicly say like they're coming out to get them. But so Bitcoin and Ethereum are like the most used, and it's because they do two different things. They have two different goals. Bitcoin, there'll only be 21 million ever created. There's no limit for Ethereum. Like Ethereum hasn't come out with this is what our limit is. So people are creating those every single day. I'll be posting a link to a video where I kind of talk about cryptocurrency as well. If you still have some questions about it, I talk about the different types of cryptocurrency. I'll post that down in the link below. Share with your friends. You know, we have some good info on here. Don't forget to share with your friends. And like, comment, subscribe. Kid, thank you for your time. Until next time.
Peace.